G'day and welcome to the weekly VEMA Trader Bitcoin market scan. My name is Rhys, and in today's video I'm going to run you through the trade that we set up last week and we'll take a look at how that played out. Then we'll go and take a look at Bitcoin as it stands today. We'll see if there's any trades that we like the look of, and if there is, I'll set those trades up. So what we'll do is we'll head to VEMA Trader and we'll get started. Now, unfortunately, we took another loss last week. That is now 2 weeks in a row, but that's all right because that's why we have risk management. So what happened was we refined our zone. We used a 15-minute zone, and that did not hold. Now, that's all good. Like I said last week, I think we're targeting like a 10 to 1, right? So expecting a 15-minute zone to stop a 4-hour move is not going to work every time. But when you're getting 10 to 1 risk to rewards, it doesn't have to work every time for it to be profitable. This is one of those times that it did not work. So the only tag that I have added here is refined zone failed, because that way, as I've tagged that 4-hour 15-minute refined, when I later go and analyze my data, I can bring up all my trades where I did refine a zone using this sort of style, and then I can see, okay, here's how many times that actually played out, here's how many times that resulted in a loss. And from that, I can actually gather, is this a strategy that is worth me pursuing? Is it making me money, or is it just a waste of time and I'm losing more than I'm winning? Losing more than I'm winning in terms of losing more money than I'm winning. Because I might be losing more trades than I'm winning, but with a 10 to 1 risk to reward, you can lose plenty of trades and still be profitable. So really important to realize, but when I say losing more than I'm winning, what I mean is actual profits. So that's really it from last week. So what we'll do is we'll go and take a look at Bitcoin as it stands today, and we'll see what we can see. Righto, so here we are on the weekly, and last week's candle was a bit of a bullish engulfing. Some people will call it an engulfing, some won't. I would, but I'd consider it a weak bullish engulfing because it has engulfed the body of that candle before it. But then there's been a pretty big move to the upside that's then been pushed back down, resulting in a big wick to the upside. The wick's roughly the same size as the body. Body's probably a little bit bigger. So not the most bullish signal, but it is a lot more bullish than anything we've seen over the last couple of weeks. So that is good. Actually, now that I'm looking at it, it actually looks very similar to this candle here, right? But at least it took place a little bit higher up. So it did show that, that's the highest we've gotten in the last 5-6 weeks. So that's good. Good to see that buyers are stepping in somewhat. There's obviously still a fair bit of selling pressure though. That's what has pushed price back down. So really nothing has changed for me on the weekly. Still thinking that, 29 is the next supply zone, and about 11,000 is the next demand zone if we do break through this sort of 18k level. Righto, so here we are on the dailies, and there is exciting news for some people. So I tend to draw my market structure a little bit weird. I think of it on like a higher time frame than most people tend to think of. So what I would call daily market structure, you might call weekly market structure. That said, right now, a lot of people are potentially seeing a daily market structure change, right? Because we have formed a high that is higher than these highs. We have broken this poor zone that was holding price. So that is good to see for the bulls. Now, for me, that's probably more of a 4-hour market structure change just because of the way that I think about it. But it's always worth keeping in mind how other people see the market and what other people think and do in the market. So if you are seeing that as a higher high, that's exciting news because that is the first higher high with the break of those highs since April. I think even maybe March. Yeah. So that's the first higher high in 4 months. So that is good news if you are bullish on Bitcoin. The reason that I am not too excited about that is because even that higher high, and with the way that I kind of think about market structure, I just saw that as part of a bear flag. I didn't really see it as a higher high. Now, I was right in that case. That bear flag did play out, but that doesn't mean that I'll be right in every case. Sometimes I will see that, and then it will not be a bear flag, or it'll be a bear flag that does break to the upside. So just because I was right there doesn't mean I'll be right this time. But I kind of see things similar at the moment, right? There is this sort of pattern, depending on how you want to draw it. So an ascending wedge. That said, it's not the strongest one, right? Because it's only had 2 touches on that top line. So this one here is the one that allows you to draw, draw that top line. And we did reject nicely from there. Otherwise, I wouldn't be drawing it. But until that's sort of hit for a 3rd time, you can't really be sure that that's the pattern, right? It's more, so like the way I had it taught to me when I learnt was 2 points are enough to draw a trend, 3 are enough to confirm it. So you really need that push in, reject to go, okay, that is definitely a valid trend line. So that said, what I'm kind of thinking might be happening at the moment, or might happen over the next couple of weeks, is a bounce from where we are up to the 50. Now, the reason that I think that is we have this EQ, right? There's a pretty strong daily EQ at about 21,500. There's also what you could consider a daily pause zone. I'm probably going to draw in a 4-hour pivot zone. When we get down to the 4-hour, I'm sure there's going to be a zone in there. I'm probably going to draw it as a 4-hour because it's kind of a weak one to draw on the daily. And then you've also got the fibs that, again, I'll probably draw these on the 4 hour, but you can see that lines up beautifully with the 61.8, or the 50 lines up beautifully with that EQ. So I'll bring those back in a sec. I'll just try and keep the chart a bit clean for now. That said, I don't consider fundamentals in my trading, and I do know that there's a big Fed announcement this week, and a lot of people are saying, hey, if the Fed announcement is like 100 basis points or anything, the markets are going to tank. Now, what you have to keep in mind is markets are forward thinking. So if everyone thinks that, and everyone thinks it's going to be 100 points, a lot of people will sell before that announcement is actually made. Sort of buy the rumor, sell the news. That's kind of a little bit different. But yeah, you've always got to try and keep in mind markets are forward thinking. That's part of the reason I'm not that big on fundamentals, because if markets are forward thinking, usually people will think like, oh, Tesla has to be worth more in 10 years, so I'll buy it today because it'll be worth more in 10 years. But if everyone thinks that way, everyone essentially bids the price up to what it should be worth in 10 years. So that's a video on its own. It's a pretty big concept, but that's something I am keeping in mind, right? A lot of people are saying, oh, this Fed announcement will be terrible and it'll tank the market. If everyone's thinking that, it's kind of less likely to tank the market, because if you think it's going to tank the market, let's say it's on Friday, if you think it's going to tank the market, why are you still in the market? You would sell. You would sell through here, and then, you're expecting to be able to buy back in here. So if everyone who believes it's going to tank the market has actually sold before the announcement, who's left to sell when the announcement comes out? The people that didn't think it was going to be what it was. Yeah, and there will be some of them, but it's just really something you have to keep in mind. I find a lot of people think when they hear fundamental news, they're the only one who hears it and thinks the way they do, and it's not the case. It can be, it absolutely can be, and there's been times that ignoring fundamentals has hurt me in the past. So take everything I say with a grain of salt, absolutely, but that's just the way that I like to do things. So that was a big old tangent, but that's all right. Tangents are part of the game too. So yeah, I'm not seeing this as like that's kind of what I see as like the next logical progression of Bitcoin. You got to keep in mind that markets are not logical. Markets are very emotional, and whenever I am long at the moment, or not even long, but whenever I'm feeling bullish, what I like to do is zoom out and go, okay, you got to be very careful going long at the moment, because that is basically just a market that's going down. That is a market that is just, repeatedly selling off. So I am very cautious with going longs at the moment. I do absolutely think there is still a chance we go down to 10K, like I spoke about on the weeklies. But, when I look at the dailies right now, that's kind of what I see as being the, what I think could happen over the next couple of weeks, essentially. Okay, so there is quite a lot going on here on the 4 hour. So bear with me, I will run you guys through everything. So what I always like to do is get that scribble from the daily and then think about, okay, what I was expecting was something like this, I think I was actually targeting up higher, but let's leave it there for now. Something like this. So what would make sense on the 4 hour to happen for price to get to there? And then I set up trades based around that. So the first one that I think could lead to that is a break of the current descending wedge. Now, this is not the wedgiest descending wedge I've ever seen. Some people would just draw it as pretty much purely a channel, something like that, potentially. To me, it's a little bit of a wedge, but not the strongest one. But it is coming in onto this 4 hour pause zone, which is holding for now. We have pushed a little bit into it. We also have a daily EQ at the bottom of that, and the 50 fib of the big push up, right? So I look at that and I go, okay, there's a good chance price bounces here, but I don't really want to take a long just based off that. So what I have done is I have actually set up a break and retest on alpha. Now, what I have done is I have put in a distance to confirm, I have put in a distance to break, because I want a lot of confirmation on this, right? Like I said, with how bearish the entire market has been for so long, I'm hesitant to go long at the moment. It's not something I'm excited about. Or not something I'm excited about, but yeah, I am very cautious going long at the moment. So I wanted to really have a lot of confirmation that what I'm seeing is playing out. Now, what I've also done is by doing that and having alpha on a slope, I'm actually saying there's no way this trade is going to enter until later on, right? Because I need a 2-to-1 minimum risk to reward. So this trade's not really likely to enter until maybe somewhere around here. There you go, 2.2. So what I'm saying is, hey, if price comes straight back up right now, I don't really want to get into that trade. But if it does sort of play out, as I'm expecting this wedge, to potentially play out, something like that maybe, VEMA would enter me in maybe around here, or maybe if we came back, this was the retest, and then it'd enter me it'd be even better, somewhere like that. So the longer it is until this trade plays out, the better my risk reward gets. You'll also see though that I have an expiry date, because eventually, if we're really squeezing down into this corner, I don't necessarily want to get into this trade. In fact, I'm actually happy to get into it for a little bit longer. But if it's over here, I really don't want to be getting into this trade. So probably about there is my cutoff. Now, as you would have just seen, you can click and drag the expiry date. I was talking to someone this morning who did not realize you could do that. It is so much easier to click and drag than to have to type things in, because you can put it exactly where you want it. So that is the break and retest trade. Now, all the longs are for 0.5% account risk, because I'm going long when my high time frame bias is against longs. And then in terms of tags, it's basically 4-hour demand zone, daily EQ, 50 fib, and then descending wedge is the majority of them. Things like break and retest, because I don't do a lot of break and retest trades, that's tagged for me. I don't have to tag that, and I've gone for a paper trade because I don't do a lot of break and retest trading. But it's something that I just sort of wanted to have on there to see what could happen. Excuse me. Now you'll notice that Delta is also here. Delta is actually the trade that I like the most of these four. And the reason for that is it's a short. And because my high time frame bias is bearish, even though we did get that, daily, maybe I'd call it a 4-hour higher high, but some would call it daily. I really look for shorts at the moment. So what I'm expecting with Delta is if we do come up, and remember, because my break and retest is so specific, it's unlikely to enter if we come up, quite soon. I would like to take a short from this zone. This zone, and even this zone here, sort of thing, led to the break of these levels, which has been a pretty solid EQ historically. Let me get rid of some of my drawings because there is quite a lot there. And I think what we could see over the next week or so is a bounce from this level, head up here, and then continue down to these levels. What I've done is set up a short to catch that if that was to happen. So what I'm thinking there is, if that's my 4-hour thoughts, and then my daily thoughts is that big push up. Now, as always, I don't think that's guaranteed to happen, but I like to think that's what I think could happen. How do I take advantage if that does happen? So I've set up that short from Delta. Now that is pretty standard for me. That is sort of just 1% risk, because it does agree with my high time frame bias. Stop on the other side of the zone, take profit down just above Bravo, because I am setting up a long from Bravo. I'll show that in a second. And in terms of the journal, sort of 4-hour zone, 4-hour EQ, those kinds of things. Then we come to Bravo and Charlie. So those are quite similar, so I might only go through one. But essentially what I'm looking for is longs. Longs from those levels, and really I like Bravo a little bit more, although Charlie has its benefits too. So what I'm seeing there is these two zones, right? There are solid 4-hour demand zones at those levels. The one for Bravo especially lines up really nicely with the 61.8, lines up really nicely with a 4-hour EQ. So I am, interested in taking longs from there and then hopefully riding them up. I probably wouldn't wait all the way to here, because if we do get down here, like I spoke about on the dailies, bounce from the 61.8, I'm not expecting it to go as high. So I'll probably take profit somewhere around there. But just, that is a place where I go, okay, there could be buyers stepping in here. I wouldn't mind taking a long. And especially, there could potentially be a lot of people longing through here. So if you push through there, you get a lot of sells, a lot of stop losses. Let big boys get their big buys on, and then we might see price come up. So again, 0.5% risk, because it is against my high time frame bias, and then my stop loss is just on the other side of the zone. So we go to Bravo, just on the other side of the zone, because one, that's just how I do stops in general, and two, if we do go through that zone, then I want to get on at Charlie. What I like about Charlie is there's less reasons for buyers to be there necessarily, but a lot of the time you do find, if there's two zones like this, price pushes through the first to get to the second, and then Charlie gives a really good risk to reward. So from Bravo, I'm targeting a lot higher from Bravo. In fact, I might even pull that down. Yeah, we'll put that there. I'm targeting a lot higher from Bravo, so it's a 4.93 to 1. But what you'll find with Charlie is, even though I am targeting quite a bit lower, it's actually pretty similar risk to reward, right? 4.5 to 1, because my stop loss is a lot tighter, because that zone is a lot smaller. And the other thing I like about Charlie is if we do get to Charlie, I'm expecting it to take a little while, and that trend line will then be coming up to meet price. So there's another reason for people to be buying off that level. But if we do get all the way to Charlie, then I'd probably take profit, reasonably early, because I just like to lock in those gains. So that's really it. That's really what I'm seeing on the 4 hour. Now, the other thing that I do sort of think is if we do break this level, we're most likely coming down here. The reason I haven't set up one of those trades that I do like to set up, where I would have, a candle close, a short candle close from Echo, is the risk reward would be no good. There is just no way, because I do like to use the zone for my stop loss, there is no way that that's going to get, oh no, that's not what we wanted to do. No way that that's going to get any decent risk reward before Bravo, and I wouldn't really want to be targeting Charlie from there. I would definitely want to be targeting Bravo. So if your risk reward is not good enough, there is just no trade there. So that's really it. Those are the options of what I'm seeing on the 4 hour. So to give you a quick summary, we have sort of a dribble along, break and retest. We have a bounce back up, into the short, come down. I should have done different colors for all these, and then we have a Bravo long and a Charlie long. So that is it for the week from me. 4 trades. It might be the first one I've ever set up. I think I've done like 5 one time in one of these videos, but yeah. Hopefully you guys enjoyed this update. Hopefully you guys are enjoying using VEMA. Let us know if there's anything we can do better, and let us know what are your favorite parts about VEMA, right? For me, there is a video coming soon on data collection. I'm just running some experiments that I'm really enjoying. It's really cool to collect the data in that way. So yeah, let us know if you have found any cool uses of VEMA as well. Have a great day, happy trading, and I will talk to you very soon.